All right, let's get right into it. If you're an aspiring first home buyer in Australia, you know you're on a bit of a quest, and there's always one giant beast standing in your way, the 20% deposit. It's the great deposit hurdle. But in this explainer, we're going to talk about a new government scheme that's basically handing you a much sharper sword to help you finally slay that dragon.
So, here's our game plan. First, we'll size up the dragon itself, the great deposit hurdle. Then, we'll look at the government's helping hand and its game-changing new expansion. After that, it's time for a crucial reality check from the lenders. We'll also tackle that big economic question. Will this just drive up prices? And we'll wrap it all up with a blueprint to get you started on your own home buying quest.
So, first things first. Before we can even talk about a solution, we really need to understand the sheer scale of the challenge that pretty much every first homebuyer is up against right now.
It all comes back to this, doesn't it? The great Australian dream. You know, the idea of owning your own patch of dirt, your own place to call home. It's an idea that is so deeply woven into our national identity.
But that dream pretty quickly smacks into a staggering financial reality. Just look at this number. To buy a $900,000 home in Sydney, which is the current cap, a 20% deposit is $180,000. I mean, for most people, saving that kind of money can take years, sometimes even a decade, and you're paying rent the whole time.
And, okay, what if you can't scrape together that full 20%? Well, then you get hit with something called lender's mortgage insurance, or LMI. Now, the most important thing to get your head around here is that LMI protects the lender, not you. You're the one paying the insurance premium, but it's only there to cover the bank's risk because your deposit is seen as too small.
And how much does this protection for the bank actually cost you? Well, it can be up to $25,000, sometimes even more. That is a massive extra cost tacked right onto your loan just for the privilege of getting into the market. It's a huge, huge barrier.
But what if there is a way to get around that barrier? Well, that's exactly where the government's helping hand comes in. It's called the Home Guarantee Scheme.
So how does this whole thing work? It's actually brilliantly simple. Step 1, you save up a 5% deposit. Step 2, the government then guarantees the other 15% to the lender. So, step 3, from the lender's point of view, they see what looks like a full 20% deposit. And here's the magic part. Step 4, you completely avoid paying that huge lender's mortgage insurance premium. This one thing can literally cut years off the time it takes to save for a home.
Now, this scheme has already helped over 230,000 Australians get into their first home, but it's about to get a massive upgrade. Starting October 1st, 2025, the game is going to completely change.
And the shift here is just dramatic. Before October 2025, the scheme had a limited number of spots each year, and there were really strict income caps that just ruled a lot of people out. But after October 1st, those place limits are gone. It's unlimited. And the income caps, also gone. The door is basically being thrown wide open for a lot more people.
And it's not just about who's eligible. The property price caps themselves are getting a huge boost to actually reflect today's market. In Sydney, the cap is jumping from $900,000 all the way up to $1.5 million. In Brisbane, it's going up to $1 million. This gives you, the buyer, so much more choice in what and where you can actually buy.
Okay, this all sounds pretty fantastic, right? But before you start looking at $1.5 million homes, we need a serious dose of reality from the people who actually write the checks, the lenders.
So let's ask the obvious question. Just because the new price cap in Sydney is $1.5 million, does that mean you're automatically approved for a loan that big? The short answer is a very hard no.
Look, the government guarantee gets your foot in the door, but the bank is still the one lending you all that money. And trust me, they will put your finances under a microscope. They're going to look at your serviceability. That's your real-world ability to make the repayments. They'll dig into your credit history, your existing debts like car loans or credit cards, and they have their own, often pretty tough, formulas for what they think your living expenses are.
And to give you a really powerful example of how this works, a mortgage broker analysis shows that for every $5,000 of your credit card limit, and that's the key word, the limit, not even what you owe, it can slash your borrowing capacity by about $20,000. They look at your potential to get into debt, not just the debt you have now.
You know, it all boils down to what the old school bankers have always called the 3 C's: capacity, collateral, and character. Capacity is simple. Can you repay the loan? Collateral is the house itself. And character? Well, that's your financial track record. You have to prove you're a good bet on all 3 counts. Okay, So, we know the scheme is going to help a lot more individuals get into the market. But what about the market as a whole? This leads to the big, thorny economic question. If you suddenly unleash a flood of new buyers, does that just lead to higher prices for everyone?
Well, property expert Cameron Cusher, speaking of The Guardian, brings up this exact concern. He argues that expanding this scheme without also increasing the number of houses being built is only going to drive prices higher and increase competition. It's a classic supply and demand problem.
And that right there frames the whole debate perfectly. Is this new, expanded scheme a desperately needed helping hand for first home buyers, or is it just throwing more fuel on the fire of an already scorching hot property market? The real answer is probably somewhere in the middle, but it's the absolute key question to be thinking about.
Which brings us neatly to our final section. We've looked at the scheme, the good, the bad, and the risky. So now let's turn all of this analysis into an actual plan with your first home blueprint.
It's a pretty simple three-step plan that comes from all the expert advice. Step 1, define your goals. Be really clear on what you're looking for and your time frame. Step 2, know your numbers, and I mean really know them. Your budget, your actual borrowing capacity, and all the hidden costs. And step 3, and this one is crucial, get expert help. Talk to a good mortgage broker early, way before you start looking. They live and breathe this stuff every single day.
So there you have it. The expansion of the home guarantee scheme is set to completely reshape the first home buyer landscape. It is a massive opportunity, for sure, but it's also going to start a brand new kind of race. So the final question is for you. The starting gun fires on October 1st. Is your strategy ready?